Welcome back. Let's get you all the business news now. And markets swung between gains and losses to end lower after the Sensex hit a fresh record high in pre-open, while IT and PSU banks were the top losing sectors. Media and metal sectors advanced. Hiral Dadia with a wrap of all the market action.
After two consecutive sessions of close at record levels, we've seen profit booking that has come in terms of markets today. We did swing into, between gains and losses, and it was Infosys as well as Reliance that were the major drags on market. Nifty ended below the 18,800 mark, whereas if you see Sensex ended with cuts of almost 150 points. If you see Bank Nifty as well, that ended in the negative, but it outperformed the benchmark indices in trade. Overall, the mid-cap index declined and it actually snapped a 8-day gaining streak, and the breadth was pretty much in favor of the bears. As we know, the expiry is going to be truncated in truncated weeks, so it's going to be interesting to see how traders actually react to it, and there could be some amount of profit booking that could continue. In terms of top gainers, you have the likes of L&T, DV's, Tata Steel, Bharti Airtel as well as the HDFC Bank, whereas on the losing end, you had Bajaj Finance, Tata Consumers, Tata Motors. In fact, Tata Motors, after hitting 7 years high, has started to see profit booking. Asian Paints and Britannia was trading under pressure. In terms of newsmakers, HAL, one of the newsmakers, GE and HAL will be making fighter jet engines in India as Modi wins a landmark deal. You had Fortis Healthcare was in focus, and they're looking to sell their business operations of the Fortis Hospital in Chennai for 152 crores. Sugar stocks were up in trade on the back of global sugar prices. Hindustan Construction jumped in trade after a 3.4% equity deal. RVNL won as well on the back of overall contract worth 281 crores. Delivery as well as Sansera Engineering on the back of a block deal were in focus. So overall, a lot of newsmakers in trade today, but clearly the markets were on a downhill, witnessing profit booking. Back to you.
Standard Chartered's Manpreet Gill expects the US to head into recession. While speaking to Neeraj Shah, he said the US recession will have a direct effect on Indian markets.
So at a top-down level, similar to our views across many major markets globally, we have a balanced view between the two. So in an asset allocation context, that's a neutral between equities and bonds, compared with a year ago when, of course, our big overweight was in equities. And I think there are a couple of different factors going into that, right? One is, if you could argue that if our US cycle view is right, whether it's now or it's delayed by 6 months, we do expect the US, to head into a recession. And we've seen in the past that does have a correlation to Indian financial markets as well. And that's the point in the cycle when bonds, high quality bonds, tend to do well. But more than that, Paul, it's also just where yields are today, right? So you don't necessarily have to be negative or have a view on equities to change, even if you don't agree with us on the growth slowdown. But, bond yields have come up a long way. Even shorter-term bond yields have come a long way, following the series of rate hikes over the past year. So in our view, that's changed the balance of risk versus reward. It's clearly improved the return outlook on that 6 to 12-month horizon for bonds. And that's why at a broad level, we think a balanced view today makes more sense. And then within equities, of course, a few more focused sort of sector picks as we hopefully ride this yield and eventually some capital gains if bond yields do come through, at least on a cyclical horizon.
Bharat Electronics rallied in trade after it received orders worth 5,900 crore rupees. The public sector defence unit received orders for 2 regiments of improved Akash weapon system. BQ Prime's Hiral Dadia spoke to BEL's Bhanu Prakash Srivastav. Listen in.
My first question coming to you is, firstly, in terms of the order win, a 5,900 crore order, if you could help us understand what are the order, what is the compilation of it, and what would it mean in terms of the order book?
3,914 crore is from BDL, that is related to Akash Prime projects, which includes ground support equipment, surveillance and tracking radar, and seekers for missiles. And remaining are small orders like ground-based ELINT system, communication systems, spares for EW systems. So all these smaller items taken together constitute around 1,900 crores or so.
Right. So with this order win, clearly it seems that we will be able to meet our FY24 guidance as well. We have a guidance of an order inflow of around 20,000 odd crores. This makes up for almost 30% of it, right?
Yes.
Right.
Definitely, we are going to meet whatever guidance we have given, 20,000 crore plus.
Cyient DLM, a unit of IT services firm Cyient, has set the price band for its 700 crore rupees initial public offering. The company has set a price band of 250 to 265 rupees a share for its IPO that opens for subscription on the 27th of June. BQ Prime's Sajid Mangal spoke to Cyient DLM's chairman. Listen in.
The first is on some of the debt that we have. We think we need a little bit more of a debt-free structure because that will allow us to invest for growth. The second thing is working capital. Like I said, the demand is very significant. Therefore, we will need working capital over the next few years, which we will require to invest in or which we will require for growth. And the third thing is further investments, both in terms of SG&A. We see a few opportunities for us to invest aggressively, be it in sales, be it in leadership, be it in technology systems and processes, but also a few small investments that we will need to enhance our capabilities. So it's these three things: pay off some debt, use for working capital, and third thing is investments into some of the levers for acceleration of growth.
Now, it's been a lost summer for white good manufacturers. Rising prices and unseasonal rain dented demand for fans, ACs and even refrigerators. Sesa Sen joins in with the details.
Yes, that's right. The makers of cooling products such as fans, ACs and refrigerators have cut down production by as much as 35% as they're struggling with unsold inventories. Now, while the high base of the previous year and inflation are partly to be blamed, this year there is one more dampener, that is unseasonal rains. Now, erratic rainfall throughout April, May and the first half of June dented demand, especially in the North India, a region that accounts for about 40% of the overall summer sales. We spoke to several companies, dealers and retailers to understand the on-ground situation. Most of them said that like last year, they had anticipated another year of good sales. However, the summer of 2023 has been predominantly bleak, with some companies even labeling it as one of the worst summers in several years. Of course, excluding the COVID years. Nilesh Gupta, director at Vijay Sales, anticipates a 20% decline in sales for the cooling products category during the first quarter until June 20. Analysts also agree. ICICI Securities, for instance, expects revenue growth for white goods manufacturers to remain weak in the April to June period. While the deflation of commodity prices may offer some relief to their margins, yet analysts expect the companies to invest their gains in increasing trade schemes as well as enhancing consumer offers to boost demand. While the summer season is nearing an end, it remains to be seen if higher promotions translate into robust sales in the months to come.
And with that, it's a wrap on all the business news.